Alright, boys. Pretty interesting Friday night. Quite open so far today in Asia. A lot of the action really happened on Friday. Yellen and Carney speaking. Carney didn't help the pound at all, suggesting they're going to allow inflation to run hot. And Yellen was surprisingly dovish. Now, I positioned myself to be long dollar yen on the back of her coming out being quite aggressive and forceful about December rate hike. She was surprisingly non-committal. And I think we got to just rethink here how long the US dollar you want to get. Alright, at these sort of levels, because to sustain this move forward, we are going to require the market really pricing in this December rate hike, and we actually want it to happen this month. Right? We want it to happen in the next couple of weeks. We want Fed speak after Fed speak after Fed speak, locking it down so market expectations get locked in, and then it's like, okay, they're raising in December. There's no question about it. It's just happening. Market volatility can begin now. US dollar strength can begin now. But we didn't get that. Yields remain quite strong. All right, but the confirmation that I was looking for, and that kick that would get dollar yen to 105 and the euro away from 110, didn't come through. In fact, if anything, right, this makes things a little bit more complicated now that you want to be a little bit on the sideline, especially with, say, some of these commodity currencies. So commodity currencies have been looking for an opportunity to get involved on the long side. The Aussie fell all the way down to 75 from 77. Rejected that level pretty sharply. This is Friday's rally, and seems to be buying on the dip here, 75.80. If you know the Aussie, you know 75.80 is a level, and it just bounced off that so smoothly. I'm like, wow, things have changed. Now the same thing's happening with Kiwi. Now Kiwi, we've been wanting to sell down to that 200-day moving average, which is 69.50. Also, it's the low there from July, and that would have been a great risk reward on the buy side. Now we've got ourselves a situation where the market's short into a critical piece of data, which is the quarter-on-quarter Q3 CPI numbers, with expectations extremely low, and the market pretty much priced in the November rate cut. So that CPI number tomorrow morning is critical for the whole debate about the cutting in November. Yet the market's made their mind up yet, and the number's expected to be 0% quarter on quarter, which is a really low number. And anything above that, I don't think we've got that lower number for ILI. In January we got a negative 0.5 print, but generally it comes in 0.2, 0.3, 0.4, subdued but not that weak, with the number being so strong in Q3, perhaps because of the strength of the Kiwi in Q3. This is a major risk event to the top side, not to the downside. The downside, if it comes in weak, it just confirms what the market's already expected, and you get a sort of a 69.50 test perhaps in the next couple of days, but begrudgingly, right, because the market's already priced in at 80%, 85%, 90% that there's going to be this rate cut. So if the numbers come in strong tomorrow, 0.1, 0.2, 0.3, the uncertainty will increase, and the buying of Kiwi and the short covering will accelerate. And the bigger picture of the Kiwi, perhaps we've got a bottom in here starting to be developed from this pullback, and the market can go back to buying the Kiwi because it's high yielder, mostly against the dollar yen, against the yen, and mostly against the euro, but perhaps against the Aussie as well. But they like to move as a pack to these pairs, and that's why you're seeing the Kiwi and the Aussie rally together. So this is really, the doors opened by Yellen, the doors opened by the lack of failure of pushing through from the US dollar side. So pushing through, here the dollar yen getting to 105 and the euro kicking below. That doesn't mean that the euro itself is not going to have a run lower. If the ECB comes out and extends the QE program on Thursday, pretty much a big opportunity there for Draghi to kick a goal, an own goal, try and get the market to extend this sell-off. The bar's set pretty high though, right? The expectations are already priced in that they're going to do that. Any sort of hesitation or any door opening of taper, wow, the euro is going to rocket, all right? And that's where the market's already now take its foot off the pressure. With the US dollar buying, you could have perhaps the dollar yen pullback, and then with, say, the right conditions, the Aussie and the Kiwi extend that to more serious resistance up towards 77, and the Kiwi back towards that previous breakout level, that 72.20, 71.80, which is where we were so keen to sell the market if it broke through on the way down. So yeah, I mean, I don't like it when the market just flips every week, but got that feel. I don't have the same conviction here to sell into this rally on the Aussie that I've had for the last couple of weeks and selling all these other rallies. And the Kiwi, I don't touch that with the 10-foot pole at these levels after the strength that you've seen and the risk data coming out. I mean, and I didn't know the market had baked in so much expectation already. And I was hoping for a bit more US dollar strength, and it's just things are lining up against a lot of these trades. So on that note, I'm going to take profit on a few of these trades before I get into trouble. Dollar Swiss is basically short euro. And that's a bit loud, wasn't it? Dollar yen. We're just going to sit on the sidelines in these dollar trades for a sec. I want to keep the Mexican because Trump's just being insane. Going to get out of the Dow. So I'm pretty clean at the moment. Pretty clean here. Good little run of about 4,000 or 5,000 there from being the long of the US dollar, but I wanted more from Yellen. Okay, so look, you can be a hero and continue to buy, but it's not there for me. Over the weekend, there was some ultra negative headlines regarding the pound. The market actually was relatively subdued on these headlines. Okay, so Sturgeon, Scottish leader, said there's likely to be a second Scottish referendum by the 2020, which is the next referendum date, and the next general election date in the UK, and also the timeline for maybe she's hinting that they're going to have another referendum before the UK leave. And what that basically does is that, well, where can they go, right? If they leave, they can go to the euro, like Ireland. I mean, that's crazy negative potential here for the UK. Like, you needed that level of uncertainty. Also, you had Merkel over the weekend being quite confrontational in her stance, saying there is no negotiation, no access to this, full access to the EU market when you don't have free movement of labour. That's the exact words, though. I'll get the exact words. Sorry, guys. We don't have the same set of problems here, do we? In Australia. I suppose we have the same problem with the Kiwis coming over here stealing all our jobs. He took care, Joe. Okay, so Merkel says, no freedom of movement, then no full EU market access. Yeah, okay, so that's their starting position. What's the starting position of the UK? Well, we're ready to go hard Brexit if you don't give us control of our borders, because that's our main thing. And you need us as much as we need you. And Boris Johnson saying, look, it's all bluster, there's going to be a compromise at some point, but the market wants to hear that compromise, right? But, importantly, with that door open from the US dollar weakness and the lack of follow-through on the very negative headlines, that's bullish. Okay, that's bullish price action. As much as that doesn't make sense to some of you, this is extremely bullish because it could be down 200 pips on this. And it's not, and it's weird. So it's like, well, what's happening here? Who's buying? All right, who's not selling? That was selling last week, and that sort of hints that we could have the short squeeze. You know, that's the sort of thing that the market does. It rallies when the most negative news comes out. All right, and that's just it's a tactical play. You get the sucker in all the shorts on. Oh God, it's got to go down for that. That's it. It's going down. Not understanding the market's already heavy short, and perhaps it's the right time just to take as many stops as possible to the top side and a quick 200-point move. I mean, I'm not talking about a big one. I'm just talking about a quick little clean out. So yeah, this would mean that I'm definitely sitting on the sidelines here on the shorts, and I'd be looking towards fading any sort of sharp rally just if the market tactically has squeeze here, because it is negative in hindsight, right? It's just the price action is bullish, and it's a warning sign when the price action is bullish after really weak news in a overextended market. Yeah, welcome, Diego. Welcome for FX Ram 87. If you're watching this over in YouTube, come across to forexsignals.com. We have a chat room there where you can actually ask questions, get us to look at particular charts. I'm in the middle here. I've just removed that so it doesn't go into the infinite loop. But yeah, opening ramp pretty much done. US dollar strength on the back foot. Doors open for a little bit of counter trend rally. Surprising price action in the pound, and every market's focused on the euro and the Kiwi this week. Pound Aussie short. Well, this trade needs there to be no short squeeze. It'd probably be okay. Alright. Aussie's looking quite strong. Euro long. What are we doing here? Yo-yo. Let's have a little look here. We're going to enter tight stop. Nice. Little bit bust back above 110. Take some stops there. Yeah, I mean, this is really achievable in the current market. Don't mind that at all. Yo, yen short. No, dollar yen's helping, but the euro is not. This would be a little bit dangerous there, rapid. Johnny Leon. Short. Why? M12. Cut the M36. Jesus. Is that a thing? Is that a thing? I mean, let's have a look at Johnny Leon's trade tomorrow and see how it goes. I mean, the market's been under pressure all day. Without much of a story. I'm talking about the stock market. Sentiment's been quite weak. DAX is selling a little bit at the start of the European session, so perhaps we have got a little bit of negativity coming through. But yeah, no, I haven't got much exposure to that technical system before. I've heard a few moving average numbers, but I've never heard of the crossover between the 12 and the 36. So let's keep an eye on this. I haven't seen you post much too either, the Johnny Leong. Hopefully it comes out good, mate. And the other's a little far away. Aussie Swiss. I've seen that. Aussie Swiss is basically Euro Aussie short, right? So he's long Aussie Swiss, the same as Euro Aussie short, which is a little bit more dangerous than pound Aussie short, but similar sort of trade. Alright, so let's have a look at how some of the banks are coming out talking about Yellen and the ECB previews. I mean, we're going to be doing ECB again, probably live this week. I'll have to double check with Nick. But we've been doing some of these big announcements quite successfully, so yeah, it's most likely going to be the case. I'm working 6 a.m. though, so it's going to be late if I'm doing a stream at 12. But it would be fairly autopilot. I mean, I could give you the brief on how to trade it. If they do as expected, small rally. If they don't do as expected, huge rally. So small rally even if they extend. I think the market's priced a fair bit of that in. So I wouldn't be selling on it, but I mean, it wouldn't surprise me if it fell, but it depends where we are. If we're at 111 and ECB extends QE, then we're going lower. If we're just mucking around here, then perhaps a little short squeeze. So one of the traders there has posted a widely focused on article today. So Ambrose Evan Pritchard has been around for a long time. He's a bit of a doomsayer. He was around, I remember reading him back in the Lehman Brothers crash. He was always talking negative. Yeah, I mean, he was right then, but he's been wrong since then. So a lot of his stuff is all sensationalist. He's got a reputation for that. But I only glanced at this article at the start. It was released early our session, so that's a Sunday edition over there. Let's see exactly what he has to say. So he's talking about one of the creators of the ECB. So okay, it's the ECB's first chief economist. What's the main reason he thinks it's going to fall apart? Realistically, it's been a case of muddling through, struggling from one crisis to the next. It's difficult to forecast how long this will continue for, but it cannot go on endlessly. That's true. ECB is now buying corporate bonds that are close to junk, and the haircuts can barely deal with one-notch credit downgrades. Okay. I mean, what he's talking about a little bit is that there's supposed to be all these, I don't know, like penalties for countries not having growth targets or, growth deficits in their government budgets, and all of it seems to be denied and pushed away, and it does seem like what he's talking about here, the moral hazard, it seems true. It seems like everyone's forgiving everyone. Everyone's breaking everyone's rules. They're giving money to Greece in a way which they thought they never would. And yeah, I mean, UK leaving is a pretty big move that does damage it. It needs to rebound and stabilize pretty quickly. I suppose it can get out of control, especially if the right-wing parties begin to do well systematically across the European Union. It could lead to a breakdown that would be hard to control. I mean, at the moment, obviously Merkel's trying to herd cats, and it's yeah, I don't know. There has to be accountability, right? I mean, at the end of the day, there had to be one fiscal budget, so a big united monetary union, where where a lot of countries got the same sort of allocations, and then they had bonds issued, European bonds basically issued by this next level of political integration. That's really where the sort of economics is leading, this whole endeavor. And when that happens, you do have a bit more control over what individual countries do. But at the moment, they've got pretty much anyone can do anything, and then it's up to not the ECB, but the EU to self-regulate. And they're not doing that. They're letting everyone get away with everything. They're too soft on themselves. They're the criminal and the policeman, right? Yeah, now that they are buying heaps and heaps of bonds, it is hard to see how they can just wean themselves off that so quickly. I understand pretty much where this guy's going on about, but it's something which has been said a lot. I don't know why he's come out right now. What's the tipping point? The final straw. And I want the European Union to succeed. Its failure would set back mankind, I think. But we'll see. Getting a bit sidetracked, getting a bit deep. So first things first, the euro's got to get back above 110 before we get too excited, and the Aussie's got to get back towards that 76.20, and dollar yen's got to get back below 104. So there's a few things that have to happen there before we can talk about the US dollar rally being over. Just we've got a reason for it, so there's no reason to remain long. If you've been long for a long time, you can get to the sidelines now and just see what happens next. Alright, let's have a look here at some of the data. Alright, early morning read, Jim Reed. This is coming from the FXWW room. You can get access to that for around $60 a month. I better do a little plug in here, just in case one day they cut me off for spreading research. I only handpick a couple of pieces every day, so it's not too big a deal. And I do represent where they come from a fair bit. I'm just going to show you exactly where that is. So it's a Reuters chat room. It's a read-only chat room where you can get access to traders talking about the market, proper traders, as in bank traders, and they share a lot of research with each other. Just have little chats about what's going on. Also, you can get access to Reuters Lite, which is good enough for the retail trader. So $50 a month for the chat room, and the ultimate pack is where you get the Reuters Lite, $110 a month. So pretty cheap, but you have to be trading at a level where that is pretty cheap, right? So that's 10 pips in a standard lot, normal. I can read the G10 after. We can read the early read after. I want to see Deutsche Bank's trade of the week, long Kiwi. Alright, let's see. So we talked about this. The market is pricing an 85% rate chance of a November cut on November 10. The key piece of data for RBA and for RBNZ is our Q3 CPI. The New Zealand CPI is tomorrow. The Aussie CPI is next week. But if this comes in with any heat at all, then there will be a big dramatic reversal in the pricing here of the November rate cut, and that could push the RBNZ to be more neutral, like the RBA is gone, and that would lead to the potential of it sitting on the sideline, and as the Kiwi's already fallen 3-4 cents in the last couple of weeks, there is less pressure on the RBNZ. Now that being said, if the Kiwi is at 73 going into that RBNZ meeting, and they don't cut, then we're going above 85. So 75, sorry. So there is a little bit of pressure on the RBNZ to cut, but there won't be this first central bank to pull back from that. So I can understand why they're doing that. It's a bit of a risk-reward trade. They're expecting CPI to come in, slightly higher, then you've really got a good return to the top side there. Oh yeah, so yeah, there's a lot going on this week, guys. So there's so much that's just going to be hectic to even to pay attention to what's most important. Depends what you trade. So you pick your poison. You got the Chinese GDP, that doesn't get much bigger. You've got for the Aussie, you've got the UK and US inflation, pretty critical. All right, UK inflation. We've talked about this. When your currency dropped 15%, you want to see inflation come in from the import prices, getting skyrocketing. If you can't see inflation there, then there's more chance of the BOE cutting rates again. If you see a spike in inflation, there's less chance of the BOE cutting. And even though they say they can allow inflation to run hot, they can't allow it to run super hot. So this big move coming in the pound tomorrow when that data comes out. Then obviously you got the ECB and you got the New Zealand CPI. That's critical. So ECB, let's see what we get here. Deutsche Bank's Mark Walk still expects a 9 to 12 month extension in December. But if the ECB is thinking differently, we may get hints on Thursday. Okay. Alright, so if they are going to try and bring in some taper talk, then maybe they will lighten, let the market know about it at the next meeting. You saw a little bit of a taper tantrum, though, when that rumor broke that they were considering tapering. That was a couple of weeks ago where you saw that sharp rally in the euro. So, I don't know. It's a brave man if they come out and talk about that. If Draghi comes out and talks about that. Right, don't underestimate what's going on with the yields. You're seeing that continued yield in the rally in the US yields. Oh, okay. So the yields rallied on Friday in the 10-year and in the 30-year so sharply is because this line that she said about letting the economy run hot, where they basically don't raise rates as quickly as people thought in the short term, would lead them to having to raise rates later to get inflation under control. That's why high-end rates are expected there in 10 years and 30 years from now. That's interesting. I hadn't read that analysis yet, so that makes a lot of sense. So you can't just let economy run hot if that's what her intention was short term, without some consequences long term. And Carney, we talked about his comments there about allowing inflation to overshoot, but we'll see. They talk a good game, but I think the market will be fairly hawkish, fairly bullish reaction to strong numbers tomorrow. Talking about the pound there, boys, from Carney. I'll be streaming about half an hour after those numbers, so that will be that'll be interesting times. It'll be good there to get some reaction. There's an article about from Goldman actually talking about a potential another 7% fall in the pound from here. I might see if I can find that later when we talk about that tomorrow. It'll be interesting to see what the justifications are for that. But yeah, this has been doing the rounds as well. A bit of opinion piece on what the weakness in sterling means. a quick market check here. Oh well. Once again, we're getting some failures here. Just a little bit of get so excited that we might get some movement, but this is just a tiny little short recovery. Pound still struggling. You know, I was saying how this is very bullish, but I mean it's not bullish enough for me to buy. I just wanted to wait until we got this a little bit of a short squeeze to sell into, because that news that came out was ultra dovish, but the market wasn't selling off on it. But it doesn't mean it can't. It's just I can't sell down here. That's my big issue. Something wrong with my head. Can't follow the trend at the bottoms and the highs. Always looking for good entries. But I think it's right to be cautious here, guys. We'll see. We'll come back and have a chat about it tomorrow. We'll see if we're right to be cautious at these levels this week. Alright guys, if there's no questions, I think we might leave it there today. Huge data week. A lot to look forward to. It's going to be packed. If you are going to be trading the Kiwi in any cross, just be aware that tomorrow morning there's, the Q3 CPI is not just your normal release. That's tier 1, which with a 50 to 100 point impact in the first couple of minutes. Okay, so tier 1 data. It's equivalent to a non-farm payroll, if not bigger, in this current environment right now on the Kiwi. So don't ignore it. Aussie Kiwi buying, we've been doing that for a while. Struggled to get past that. I hadn't looked at the 4 hour. Okay, so yeah, we can buy back towards 105, but anything above that's probably a little dangerous. Depends what that number comes in, but we'll look at that tomorrow. Alright boys, trade safe and good luck.